Hello, traders. This is Matt Z from the Optimus Futures Show, and this is another episode of Magnificent Tuesday, a mental trick for trading. And this trick is very easy, it's simple, but it is a good exercise that could potentially help you prevent really bad scenarios in the marketplace. Okay? Potentially can help you because you also have to be disciplined and you have to be conscious of your decision making. So let's start. So the first thing you have to recognize, okay, that in trading, you may at times do things that are outside your character and that there is a mental process that could potentially take over where you might regret that you have done it, right? So I'm sure that some of you, it has already happened. Some of you are beginners. If it didn't happen, consider yourself very lucky. So whether it happened to you, we want to make sure that it doesn't repeat itself again. If it didn't happen, listen very carefully and do not be arrogant and saying this will not happen to me, because every single person that something, I would say, that happened in the market, they did not anticipate in terms of their behavior, they ended up regretting that they've actually behaved that way, and they also swore that they would never do it. So the key is really not to be arrogant. Anything could happen in the marketplace that could affect you in a certain way, where you behave in a certain way. So the mental exercise is to think about a mental scenario. And the reason that I say a mental scenario, because it's not real life. So you have to imagine a scenario where you've made a mistake, right? A horrible mistake, a bad mistake, a mistake that you never wanted to happen. And now you have to kind of close your eyes and imagine that you're down on your account, the end of the day is came, and you're thinking to yourself, okay, how and why this happened, right? That's the first thing you think about. I don't believe that this has happened. I don't believe I behaved this way. Why did I behave this way, or anything like that? And now you start thinking backwards to say, okay, what could I have done to prevent it? But this is really what happens in real life to many people. They make mistakes, then they think that day, well, why did I do this and why did I do that? So the key is really imagine that it really happened to you. So you take all the steps that it wouldn't happen. And you can make a lot of conclusions in a very calm environment, because again, this is not the real life scenario, but if you behave like it is, you'll have the ability to think calmly, what are the steps that I'm going to do to avoid it? Let's, for example, take one example, okay? So let's say you started out the day, and again, hypothetical number, with $10,000, and you had a really, really bad day, and you ended up with half your capital that day. So you started with 10, and it's 5. And when you trade futures, it's a very risky leveraged product, and of course it could happen to you, right? So now you're at 5,000. The end of the day came, you can't trade anymore, you're exhausted. Now you have to think, what have I done wrong? What have I done wrong in terms of risk management? What have I done wrong in terms of the way I traded? What have I done wrong in terms of the leverage? And everything else that you could potentially think of that would make such a bad mistake, right? Or a bad day. Now, if you think about that and you write it down, potentially you will avoid it when it will happen. Because guess what? Every trader will have a bad day. Traders will have bad weeks. But the key, as one of the smartest risk management officers in a big clearing firm told me, if you have enough capital, you have a chance to fight another day. And if you have no capital, then you have no chance. And so the key is for you not to get to the level where you are so frustrated because of yourself when it was actually your fault and not the market. So there's a lot of people who get frustrated with the markets. They like those markets, the way they behave and what they do. But the reality, it's really their behavior around the market. So this exercise is not only good for trading, it's just good for everything. You can think about, I don't know, God forbid you get into an accident. Well, why? You didn't look to the left, you didn't look at the mirrors, you didn't look at the rearview mirrors, you were speeding. It's the same thing in trading. Now you're trying to think about a scenario of what might occur to your account and the steps that you would take to prevent it. When something bad happens in the market, traders typically become very religious and they pray that it will never happen again. And then they make a lot of promises. I hope, and they say, this will never happen again. I can't believe that I've done it. But nevertheless, they can repeat it. And they will repeat it if they did not go through the mental exercise of understanding what they have done wrong and prepare themselves for the next session not to repeat it. Let me give you an example. You can make a conclusion that you overtraded during that time. You just started saying, you know what, I didn't really look at a method. I was just being hopeful because I wanted to have my money back. Then you can say, I've over leveraged because I was hoping that, I could recover my loss. Or I was up money. I was very excited during that time. Emotionally, I should have stopped. And physically, but instead, I continued to trade. And all those things, when you imagine them, you write it down. And you say, look, I was excited here, I did this, I did that. Clearly, you can make this exercise after it happened as well in real life. But again, ideally, you want to imagine scenarios where you could potentially make mistakes. And imagine that it really happened. And then start thinking, okay, now I'm going to think about all the steps to avoid it. Now, there aren't that many scenarios that you will run into that you can think of where, a loss has occurred because of something that, that is, psychologically speaking, how can I phrase it? There aren't that many reasons that people have such bad days. Most of the time, it's lack of risk management, over trading, positions that are too big. Now, or not getting out of the market when it goes against you. There are those positions, those markets as well. So you could be, you were paralyzed. It could have been that you started off and it was a small loss and then you stayed and the small loss turned into a big loss because you were devastated. So there aren't that many scenarios that you have to think about and make promise to yourself not to repeat. However, with every single person, it could be a different reason. One could be overactive. One could be lack of risk management. It could be just something else. So you have to think about what is that's unique to you during such a scenario and promise yourself not to repeat it. And this is a really good exercise for those who are beginner traders. You guys read a lot. You go to blogs, you go to forums, you watch Twitter accounts, and I think right now what's good about now I'm not a big fan of all the social platforms out there, but one thing that is good that people are admitting to their mistakes. Sometimes they laugh about their mistakes too much, which is really not good. They compete with one another on some social platforms of who lost more money, which I don't get it. Sorry, I just don't get it. But at least people say where they're honest, and people say I lost here, and I lost there. And what you can learn from those lessons is not to say, well, he is not so intelligent, I'm never going to do that. Quite the opposite. What you should say, I have the propensity to make the same mistakes because I am human. So you look at all the mistakes that other people admit to, or if you read books about traders, the honest traders talk about trading intelligently. They don't hype the markets. They don't tell you that you can make whatever you want, like like a lot of YouTubers who are about to sell you courses for thousands of dollars who say, they can double and triple their money, in every trading session, and their students, unfortunately, believe that it's possible to find a totally different reality. But if you find intelligent people that are talking about the markets and admitting to their mistakes, what you should pay attention to is to what has actually happened to them during a trading session. And then what you can do is, after you finish reading the chapter, or the book, whatever the case is, or the article, you can kind of saying to yourself, okay, imagine that I'm doing it. Imagine that I'm actually the one that's making this mistake. Now, what can I do to prevent this mistake? And that becomes a really good mental exercise and a learning experience. So you actually put the tools in your mind ahead of time. So when something like that happens, you could potentially, and I should say potentially because I believe that some people are more disciplined than others, so I can't say this trick will help everyone, or this exercise will help everyone. But if it starts happening to you and you thought about it before, you're saying, you know what, right now I am doing exactly what I feared. And you will stop. Again, hopefully you will stop. And that's a really good exercise because ahead of time, essentially, that you have the ability to potentially make mistakes. And that way, you are becoming a very disciplined trader and you're open-minded to the idea that things could go wrong. And trading is all about the risk management. Look, you and I or anybody else, as much as we would love to believe, cannot predict the market. Cannot predict prices, cannot predict the next 5 seconds. You cannot even predict the weather. You can't. With all the tools in the world, you just can't. So the only thing, if you cannot control the price, the only thing you can control is risk management. But part of risk management is also controlling your mental mind and potentially bringing it to a point where you are conscious, where you can recognize certain behavior that you're engaging in and saying, you know what, I'm making a mistake right now. Maybe I should stop. Or you're saying, you know what, I'm actually doing something that is really good and I'm being disciplined. So it goes both ways. When you think about worst case scenario that could happen, even though it didn't happen to you, you're actually giving yourself also strength to behave in an appropriate manner because that's the opposite of it, right? That's the opposite of risk management. Now, again, if you're listening to this podcast, I know I always talk more about, how to control the risk side and how to be mentally more, stronger when you trade in the markets and developing method and all that. Now, clearly, if you want to balance this with some positive thinking, close your eyes that you're disciplined and you're doing things right and, you reached your goal and what have you done towards this goal, that's possible as well. That's absolutely fine. So you can do the opposite. I'm always on the fearful side that people will slip because of the markets and because of the way they behave right now and because of the extremes of the highs and lows that they experience in different asset classes. And again, people today trade all asset classes. So different markets could essentially show different volatility. But as you move between those markets, you should stay disciplined and think about where in this volatility I could have a pitfall. So I hope this advice will help you. Mental exercise daily of, again, a scenario where you're potentially over-leveraged, over-traded, didn't handle the cash right, didn't stop on time, whatever weakness you think you'll encounter. And again, learn from other people's experience. If somebody tells me that something happened to them in the marketplace, and despite all the experience that I have, if somebody says, this has happened to me or anything else, I always say, what have caused them to behave this way? Especially somebody who was a professional. It's not like professionals are immune to mistakes. A lot of professionals make mistakes. We were recently, there was in the news somebody that was way over leveraged and every bank was invested in it, right? Some sort of a hedge fund. But you ask yourself, well, why did he do that? Why did it happen? And rather than investigating his character, and why it happened to him, if you can't, just think more about yourself. Sometimes it's just a story. Trader lost money over leveraged. Okay, well, that doesn't tell us much what went on in his mind, but then you have to say, what if it happened to me? Could it happen to me? So it's sort of a risk management approach for things that could potentially happen, and I hope this will help you out in your trading. A little plug for my little platform here, Optimus Flow, that I love, and it's free. And if you're looking to trade, definitely test it out. You can read reviews about it. I don't care. Put Optimus Flow review or go to our page on optimusfutures.com on the platform page. Test it out. It's a good platform. It's fast. It has great display, good programmers behind it that keep on adding features, and we are adding features. Shortly, we're looking to add a journal. Probably going to see this Friday the first version, so looking forward to releasing it to our customers as well. Again, free of charge. There won't be any charge for it to our customers who are trading with us. That's basically it. Give us a call. Would love to earn your business. It's www.optimusfutures.com. Phone number is 1-800-771-6748. Local is 561-367-8686. Please remember, when you trade futures, there's a substantial risk of loss in futures trading. Past performance is not indicative of future results. Trade leveraged products, any leveraged product. If somebody provides leverage to anything, just use risk capital. This is money. If lost, you could still go on with your life, live, have a roof, and have food for you, your family. Shelter is important. That's basically it. I wish you well, and I'll see you on Friday. Take care.